Mario Draghi is celebrating his birthday today by maintaining interest rates and hinting that the ECB could expand its quantitative easing program. I'm joined by Chief Eurozone economist Claus Vistesen from Pantheon Macroeconomics to look further at this and more coming out of the ECB. So Klaus, Draghi sounded dovish in his speech, warning about renewed downside risks. The ECB has lowered forecasts for growth and inflation this year and in 2016 and 2017. Can you sum up what these risks are that he mentions?
I think the ECB is focusing a lot on the downside risks. It's true that Draghi was very dovish today. To some extent, that was expected. Also, I think to compensate for the lack of additional easing and the fact that we've had financial market volatility increase in the last couple of weeks. But in many ways, you can say that the ECB is choosing to focus on what we could call the downbeat story at the moment, which is very low oil prices, increasing downside risks for headline inflation and inflation expectations, as well as, of course, weakness in China and emerging markets adding to downside risk to the economy. And in some sense, that's what is leading the ECB to lower its inflation and growth forecasts. But it's a quite selective story, and I think that's my main point, because you can tell another story, which is one of firming domestic growth, higher core inflation, and strong demand for Eurozone exports in the US and the UK. But the ECB is sending a very clear signal to the market today that it retains a dovish bias, and risks are tilted to the upside for further easing.
He also hinted that the ECB could expand its quantitative easing program given these new downside risks. When would they be likely to act to expand quantitative easing? And is there anything more they can do?
Well, first of all, I think they need to wait, or they will wait to see what the Fed does and how the Fed guides the market this month. And then if financial market volatility increases and if oil prices fall further, I would expect additional easing as early as this year in December. I don't think that's very likely, because I think the market might actually firm before that. But it's very clear that there's an elevated risk now that the ECB will be pushed into further easing. In terms of what they can do, well, Draghi emphasized flexibility today, and I think they are very flexible. They can increase the pace of monthly purchases from 60 billion to as much as they want. They can increase the composition of purchases, and they could also potentially lower the deposit rate further to force further weakness in the euro. So all the tools that they've already used so far can, in principle, be deployed to do more. I mean, if you look at the pace of monthly purchases in QE, there's no upper limit here. They can purchase as much as they want, given a potentially even further deterioration in the inflation outlook. So I don't think that they're hamstrung in terms of what they can do. I just think that the risks are actually now that the market's firm before they get to act. But they're dovish, so we'll have to see. I mean, I think that once the Fed is out of the way, and they've guided and they've made a clear indication as to how fast they're going to raise interest rates and when, I think the ECB will have a clearer picture in terms of when and whether to ease or not.
We saw the euro dropping during Draghi's speech. A knee-jerk reaction or an indication of something more?
I think that's a knee-jerk. I think that was a little bit of a knee-jerk reaction. One thing I will say about the euro is that it seems it's quite clear to me now that Draghi's comments today have linked weakness in emerging markets with potentially more easing in the eurozone. And it's going to be very interesting to see how the euro reacts in the coming sessions to that change in story, because up until this point the euro has acted a little bit like a carry trade funder, which means effectively that when volatility rises, the euro increases because capital comes home and capital flows back into the eurozone. But maybe Draghi has pulled a fast one on markets now and changed the story a little bit, and it's going to be very interesting, I think, to see whether the euro weakens on further bad news from emerging markets because of the expectation of more easing at the ECB. I think that's what traders will be looking at the moment. But so far, I think the trend in euro is sort of steadily up for two reasons: because capital is coming back to the eurozone in the short run, and because the Fed is dithering in terms of when to raise interest rates. Those two effects are supporting the euro at the moment.
Claus, as always, great speaking with you. Now, for more insight and analysis like this, make sure you keep clicking back to Dukascopy TV. For now, though, it's goodbye.